Early look at what we can expect. Let's head over to Stan Shamu from IG in Melbourne. Stan, we've seen the Australian dollar bounce off its lows. Is this the beginning of a recovery?
Yeah, well, at the moment it certainly seems like it's a whole lot of short positions starting to unwind. Possibly, of course, there were a lot of traders who were short the Aussie dollar heading into the decision. Of course, for a while, we hadn't seen such a disconnect between what economists were expecting and what the market was pricing in. So, as a result, as soon as that sell-off occurred and some of these traders felt that their targets had been hit, particularly into that 1015 level, then we have seen an unwinding of those shorts. This has really helped the Aussie dollar recover back into that 1018 level. But the level we're really looking at now is that 10222 level where the breakdown initially occurred, which is exactly where near-term resistance is now. So in the short term, I think that might cap some of the recovery. But once we see a firmer break back above that level, then we'll probably be looking back into the 103s. Of course, with the RBA's decision out of the way now, it's back to global growth concerns and what we can expect from the commodities space going forward, for example. So today's China's trade balance numbers today will carry a significant amount of weight for the Aussie dollar. Of course, we're expecting a surplus of about 15.5 billion. We'll really have to see if China is coming back to life, and of course if some of the concerns about China and the rest of the global economy are starting to be alleviated to some extent, and whether or not some of the efforts that we've seen by central banks across the globe are starting to take effect and possibly cap some of the downside we've seen in economic data recently. So if we do manage to get a situation where this data comes in better than expected, then possibly the Aussie dollar could enjoy a near-term bounce that extends a little bit higher than that 1022 level.
Okay, Stan, what about the local market today? I want to know what's in store for us. We don't have any top-tier data due out. We're taking not too much of a lead from offshore markets. We didn't see any wild swings. So what do you think is likely to happen during the session today?
Well, at the moment we are calling it up about 0.5% to that 5168 level. So it really doesn't look like we've got too many leads, but of course equities have been in a world of their own recently in the risk space. You look at the situation overnight where equities are printing record highs, but at the same time you look at commodities, we had copper, gold and oil all lower. Of course iron ore bucked the trend. It popped back to that 130 level, but of course that all things considered, I think a lot of investors out there might start to get a bit more of a sort of belief in the global recovery, particularly with central banks around the globe looking like they are working together to try and resuscitate the economy. As a result, maybe we might see a little bit of rotation out of some of these yield plays back into maybe the resource names. And of course we can't forget the fact that a lot of traders are short these resource names, so if they do manage to keep extending their gains, this will force some of these guys to stop believing in the short trade on the resource names and possibly unwind some of these shorts, and that would probably see some of the resource names come back to life. Of course, we've already seen strong bounces in the likes of BHP, and today its ADR is actually pointing up 0.1% as well. So I think that the trick is, if we do manage to see these resources manage to maintain a steady run in the near term to the upside, then this should help the rest of the market space, because it reinstills confidence for the rest of the cyclicals and for, of course, the industrials names, which generally provide a lot of services to the mining sector. And this will be crucial for the market if we can get a situation where that resource space, which has struggled for so long, come back to life. Then we can only see the market going up in the near term if that's the situation. At the same time, we've got the banks and of course that yield attraction that investors have with them continuing to remain fairly well underpinned. I mean, they might not shoot the lights out in the near term if we see a return to the cyclicals, but of course they will still continue to hold steady because of that attraction, and that would probably help the market test those recent highs around that 52.01 level from Monday. and if we can trade through that, then we can certainly expect the market to get off to a pretty good start for the new financial year. But for now, of course, we'll have to wait and see how it all plays out at the open. Chances are that the banks will underpin us at the open. The resources, maybe they might get a bit of a lift if China's data comes in better than expected. But apart from that, it's a fairly quiet day for the region. We'll have to wait and see how it all plays out with China.
Stan, also meant to ask you about the pound. We saw some interesting moves there overnight. What's that about?
Yeah, it actually slipped through that 155 level. I think the pound had been one of the few pairs out there that had held fairly steady. Of course, we've been seeing some improving data in the UK, but I think some of these traders started doubting themselves overnight after the Australian rate cut yesterday, which largely surprised a lot of economists. And I think this has sort of indicated to some investors that maybe it is a concerted effort by central banks around the world, and of course with the BOE coming out on Thursday, then maybe this warrants taking a little bit of caution and taking some profits off the table after what has been a fairly good run for the pound over the past few weeks. So I think that's probably where the source of the weakness is. Of course, the UK data hasn't really been quite as bad as what we've been seeing, for example, locally. But we've had the ECB acting as well recently and saying they're prepared to act should data continue to deteriorate. And possibly, I mean, maybe those recent comments by Christine Lagarde saying we need to see central banks all work together to fight this slump that the global economy was in. Maybe this will force their hand. But of course, the general consensus is still that the BOE will be on hold tomorrow, but you can't just shake the fact that we are seeing all this action by central banks off quite easily, and probably we'll see the pound being sold into recoveries into that 155 level after having dropped to, I think, 1544 overnight.
Okay, interesting, Stan. Thank you again for your time this morning.
Cheers, Kate.
Well, as we count down to the budget, more leaks and more pain is